Welcome to the weekly narrative building for Nifty for the upcoming week. As always, we'll mark the weekly ranges. So I'm marking current week's high, marking the extended ranges here. Okay. So then as part of narrative building, what we will do is we'll see what is the price action which is available in that particular time frame. So we can see that in weekly time frame, although market has given a very big red candle for the last week, we still see that the price action is bullish. Okay, and then we will see whether market has reacted from any significant points while looking to the left. Yeah, we don't see any significant points in weekly time frame. Then we move to the daily time frame. In daily time frame, we see that earlier this was a demand which was available where market tapped into and created a break of structure, but market has come back all the way and made a deeper cut. Okay, so this demand is highly unlikely to hold. Okay, and when we move into 4 hours time frame, we see something interesting. That is, this was the last demand. Market has not retested as part of the earlier price action, right? So market has come all the way to the last demand in this particular price action, in this particular range, whatever we had marked. The below ranges are all efficient, and there is one, yeah, the below ranges are all efficient tested by a wick. So this is the last demand which the market has not earlier retested. So now, as part of Friday's price action, market has come down all the way till this particular extreme demand in this leg of price action. So what we can observe is, if market has to hold this demand, it has to give a change of character. Okay, so what do I mean by that? In 1 hour time frame also, if I see, right, market, although it has turned negative, right, how market will always move is market will move in phases, meaning there will be a impulsive move and there will be a retracement move. And once the market changes character also to the downward, there will be an impulsive move and there will be a retracement move. This is how the market will move in phases. So if I incorporate the same logic out here, market went up, right? This was an impulsive move, this was a retracement move, again this was an impulsive move. Now this is a break of structure for the downward side. Now I am expecting a retracement before going either to the downward direction or continuing either in the upward direction. This is what I can conclude from a 1 hour and a 4 hour perspective. So what does it mean is, we are planning to see if we can capture a retracement move as part of 1 hour time frame. So what do we how do we plan our traders? Let's go to the 15 minutes time frame. Yeah, so here what we see is very simple. If market gives a closure above this earlier swing point which we formed, meaning 760 range, then on small pullbacks we can plan to take the market higher. How long we can take the market higher? We can define the targets from a supply perspective, from 1 hour or a 4 hour perspective. Let's go to the 4 hour time frame for now. We can refine it later to 1 hour. So we can see that there was a change of character which happened here, right? So before the change of character, we see that this particular small indecision candle was left untested by the market. So what we can see is, from 15 minutes time frame, if we get closures above this, meaning if this demand is going to hold true, then on small pullbacks we can plan to take the market all the way till 26,070 range as part of weekly analysis, right? This is for the upward side. So this also means, if market opens gap up on Monday somewhere around this range and starts to go up, I wanted to see a negative reaction from here to take the market even down all the way till today's Friday's closing session or to the swing point, right? These are very solid trades, meaning flat opening, going up, small pullback, we can plan for a call position. Gap up opening, getting a negative reaction from this particular supply, we can plan to take the market down. What about these two are for flat opening and gap up opening. What about flat and coming down? It is going to be very simple. If market opens flat and breaks Friday's session low, then we are planning for a continuation trade all the way till the weekly range which we marked, meaning 25,300 can be a possible downward target if market opens flat and breaks 25,600 range. If we break 25,600 range on small pullbacks, we can plan to take the market lower all the way. Very big gap down is going to be completely avoid. Meaning, why I'm saying this is I don't know where the market will react from in case if of a very big gap down, right? So it is going to be extremely tricky if it is opening very big gap down, and it can react either from the swing point doing a liquidity sweep, or it can even react from the demands which are left out open out here, and it can go all the way, or it can reverse from any no man's land also. So I am not interested to buy the market from a no man's land. I wanted to buy a market only from a demand and sell the market only from a supply. So just doing a small recap: flat going up, breaking 25,760, pullback, plan for a call. Flat coming down, breaking 25,600, pullback, go for shots. Gap up, look for a negative reaction and plan for shots. Gap down, completely avoid. If you like this analysis, make sure to like the video, subscribe the channel and comment whatever doubts you have. I'll try to clarify as much as possible. Thank you so much for watching. We will meet in the next educational video.